Hi, I'm Jennifer Beeston. Today I want to talk to you about student loans and how they affect your ability to qualify for a home loan. 63% of millennials have student loans over $10,000. College is getting more expensive every single day. So student loans are something that we're seeing every day when we're qualifying people for mortgages, and they have special rules. Now, in terms of loan types, it differs, the student loan rules. So in this video, I'm just gonna be addressing if you're doing a loan, a conventional loan, okay? So conventional conforming loan, that would be it would not be a jumbo, and it would not be a government loan. That's a conventional loan, okay? Now here's the rule. So if you have student loans and you're repaying them, we use the payment off your credit report when we're doing your debt to income calculation, okay? Now, if your student loans are deferred, we then have to do two things. First, we have to ask you if you can get proof from the student loan company saying what your payment will be when you have to start making payments. Now, if you can provide a letter that states from them exactly what that payment will be, we can use that amount. Getting that letter doesn't really happen much. I've been doing this for a long time, and we've been trying to get those student letters for years. I would say 1 out of 100 clients has a servicing company for their student loan that will actually cough it up. So the other thing is that if the lender cannot get that letter, which generally they can't, we have to do 1% of the balance as your payment. So what that means is that if you have $10,000 in student loans that are deferred, we're gonna add a $100 monthly payment, in theory, to our calculations. So your debt to income, which is how we figure out what you qualify for, will have a $100 per month debt to represent these student loans, okay? Now $10,000, we don't usually see people not getting qualified for that. Where I see problems is I see people who have been going shopping for like a year, and their theory is, I did some online calculations, I can afford $500,000, but they're not taking into consideration their deferred student loans. So they come to us, and let's say they have $100,000 in student loans. Well, I'm gonna be hitting them with 1%. 1% of that is $1,000 a month. That takes up a lot of purchasing power. So someone who thinks, they figured it all out online, they're in for a rude awakening when they actually see the calculation. So if you have student loans and they're deferred, all lenders will be counting a payment against you. This is not unique to the company I work for or myself. This is a guideline, okay? Number two, if you're looking at buying a house and you have student loans and you're looking at a government program such as USDA, FHA, or VA, the rules are different. FHA is way worse, VA is way better. I'll be doing separate videos on those. But the bottom line is that if you're thinking of buying a home and you have student loans, make sure you get properly pre-qualified with a loan originator. The online applications are not calculating this, so you don't want a nasty surprise. If you have questions or you want to get qualified, feel free to give me a call. Jennifer Beeston, 707-478-0637, and thanks for watching.